Hi, everybody. This is Gary Dean, and this is our night video report for Thursday, April 27th, 2017. So pretty much a nothing day today. Now I know I put down in the morning notes that I this setup from the internals doesn't look like it's a setup for some kind of runaway train to the upside, and I got some emails about what I meant for that. So I figured I'll show you some of those charts and then go into just our regular charts. So first one, Nasdaq. It's been leading the way. It's at all-time highs. It seems like nothing's going to bring it down. I know we have some big tech stocks that are going to be reporting today, but they really better be priced at perfection because if you notice what this is the percentage of stocks that are above the 50-day moving average. So we have the Nasdaq that's at all-time highs, and you can see the percentage of stocks above their 50-day moving average is nowhere near where highs are. So it means that there's a select few stocks, basically your big tech, that's been leading this move right here. So they have to, they have to be perfect, and maybe they will, maybe they won't, maybe a lot of it is probably priced into it. But the fact is this: is that there's only a select few stocks that are pushing the Nasdaq up. But I'm not really concentrating on the Nasdaq all that much. I just figured I would show you that. So let's go to some of my other reasons and what I really mean. So this is the S&P, this is the VIX. Now, notice any big moves that we've had, whether it be here, whether it be the start of here. We had the VIX that popped up into the 20s, 30s. This time it was all the way up into the 50s. And from there, it was preceded by a very, very big rally on that. But whenever we've seen the VIX just kind of hover, and this was the high that it made on this drop right here, what happens is we turn into a chop fest, and it looks like we're breaking out to new highs, and then we come back down. And this is really what this setup looks like. It doesn't look like we didn't have any big spike in fear. So this move right here is in question, getting a runaway train because there was not really a whole lot of time that anybody was left to digest it. Yes, as far as time wise, it was 6 weeks, but as far as anybody being really fearful of a big drop, which that usually precedes a big rally, we didn't get that, as you can see. And in this area right here, you can see that the VIX popped up to this 16 area, pretty much where it did here. And from here we had a rally up, and it looks very similar to where we are right now, but that was followed by a drop. Now, I'm not looking for, saying that we're going to get this kind of drop because as we know, with what Woody's saying, it's not really scheduled for right now. We know when the date is to expect a drop. So maybe we turn into some chop fest like this, where we go up and down. Maybe they do head up and make a new high. But if they do that, then all they're doing is making that wave five that I explained. And wave fives are not anything that you really want to be marrying to because it's really the last wave in the big move, and from there there's usually a bigger reversal that is pending. So whether it be the fifth wave on the downside or the fifth wave on the upside, once that completes, there's usually a very, very big reversal to the opposite direction, and we are looking like we're in some type of wave five right now. So here's another reason why it does not seem like we are going to have any kind of, say, runaway train. And this is the VIX, the put call ratio, and the VXX. So notice whenever we've had any really big rallies, we've had the VIX that has popped up. It's very similar to what I just showed you. But we have the VIX and the VXX and the put call ratio down at levels that are, the rally has already been going on. And it kind of, if you look at it from here, it has. So to me, it doesn't appear that we're in this type of move. We're in this type of move here where we're going to be chopping up and down, and it's going to frustrate everybody. And that's something where I was saying where it can be an ugly range that we're heading in. And if you notice, we had the hot all-time highs here. We had a drop, came up, made highs, but we just chopped, and we never really broke out of it until we broke down. So we could chop up here like that. And that's all I'm anticipating. I'm not saying that we're going to get a big drop. If it did, you know what, honestly, it would make sense, but it's not something that I'm anticipating. But I'm not anticipating this type of move. I'm anticipating this. So here's another piece, and this is the summation, the McClellan summation index. Now, notice every big move that we've had to the upside, we've had the summation index pretty low, minus 200. This one never even got below zero. So again, was there enough, there was enough time as far as burning off some of the overbought levels but not really on a daily end of it. Just they moved them to the neutral zone. But just as far as internals, nothing really digested this move. So I'm just, it may end up being wrong, but my take is I just don't see this being a runaway train, and I believe it's going to be some kind of just chop fest that goes on for a while before the next move. Now, what I was explaining with the wave five is, here you have one, two, three, four, and I had said, this we could have made the five here, and then from there we would have headed down. But unfortunately, what this was it was just a smaller wave four, and now either we have a failed fifth or we're going to make a fifth wave, but that's going to be our wave three, and then from there, this is where I'm saying the larger move to the downside could be coming next on this wave four, and it's not even a very, very bearish picture because all this is saying is it's a wave four, and a wave five is probably going to take out these highs. So even when I'm saying it's a wave four and there's a larger move to the downside, I'm not calling for a bear market. I'm saying that this is probably where the next move is going to be coming, but we haven't seen that kind of drop in, probably a year and a half, where the S&P drops over, two, three, 400 points. So that's what I'm saying, where that once this wave five completes, that there's a larger move that's going to be coming to the downside, and the markets are actually still going to be have a fairly bullish view to them, because we would still have a wave five that's pending. So if we just take a look at our regular charts, this is the channels, and this is really the best way to trade these chop fests, is look at where we are as far as range. So we know the top of the range is 2400, the low is 20, 23, 22. That's not really tradable because it's just a bigger range that we want to look at. But if it is following this range, we're closer to the top than we are the bottom. If we take a look at a 60-minute chart, I'm sorry, let me go to a 15. So here is now a range that's zoomed in a little bit more, and we have the 2398, and we have the low that was today at the 2382. So this is a tradable range, because if you go short and it pops up and takes out the 2398, then you just cover your shorts and wait for, another setup. If you go long and it takes out the 2382, you cover your long or sell your long, and you wait for the next support area to hold, and then you go that way. So just zeroing in on the ranges that we're in is probably the best way to actually trade this. So we know we have some bearish divergences on the 60. This was the pattern that I was anticipating, where we were going to have another move down to the 2300. Obviously, the market had something else in mind, but I've always had this alternate wave three, four, and obviously it's going to be this wave five. It's either going to be a failed wave five or we made it. But in any case, this pattern was wrong. We could only look at things and say this is what could happen. But if we take out this, this resistance line that's been holding things in, which we did in a gap, then something else is going on. But we have some bearish divergences on the 60s. 15s, we had them. We kind had a decent little pullback from the 2398 down to the 2382. So 15-minute charts, that's pretty much what you would be looking for on that type of divergence. And now, really, if the bears can get it through this 2382, we have support at the 2377. So this would be the next area to watch for the bulls to step in. If they don't, then there's a good chance we're coming down to the 2369. Now, if they don't hold that, that's when we start looking down at this 2361 all the way down to the 2350, which would be closing these gaps. That very well could happen, and if it does, then we're just, the actual range that we're looking is going to expand. Right now, we have two ranges that are, we have a range, and then we have a support area. Now, if it breaks above it, that's when you anticipate that the 23 meant the 2400 or the 2406 is going to come into play, and you wait for divergences to set in, and if you want to try to short, you short. If you want to try to go long, you can go long. Me, I'm not really interested in trading this wave five to the long side, primarily because of what I was showing you on the internals. I'm not saying I'm shorting it right now. I'm just saying it's not something that I'm really interested in chasing. I want to see a range form and then break, so then I can start setting some boundaries on my trades. So just zooming in on a 5 minute chart here. Here you can see that we now have the range that's at the 2382, and here we have it at the 2392. So it's actually zooming in the ranges. And again, if you're just going to trade the range, if it gets above the 2392, your anticipation is that we're going to 2398 and then the 2400. If they take out the lows, which is the 2382, then that's when you start looking at the 2377 and the 2369 as support. If that gets taken out, then you start looking at lower support levels, which would be down at this 2357, which is a moving average. So that's really, I am going, I'm kind of neutral. As I've said, I was bearish. Those two gap ups pretty much eliminated that, the count that I was doing. So I'm neutral, even though I wouldn't be surprised if they did try to make higher highs. But like I said, with the wave five, it's not something that you really want to marry as far as a direction, because when it turns, it gets it gets ugly fast, because the retracement from the wave fives that are in there, it's fairly large. And the way that the internals are set up, I just don't see this being a runaway train. And I honestly think that we are going to be setting up a range, and we just need to see where the low and the high is, and from there you just trade the, you start selling your long positions at the top of the range, and you start buying at the bottom of the range. Or if you're short, then you start covering at the bottom of the range, and you just go in with anticipation that these ranges are going to hold. So with that, yeah, there's a chance I may not be able to get the morning notes out tomorrow. If I don't, I'll be in the trading room. I just have a doctor's appointment early, and then I do have one also in the afternoon. I just don't know which ones, what if I'm going to be able to go from one to the other, or I'll be able to get back for the morning notes. So have a great night, and I will talk to you guys tomorrow.